What's up YouTube? Eric here, Mr. Fired Up Wealth, bringing a brand new IPO to the channel today, HashiCorp. This is gonna start trading tomorrow, December 9th on the New York Stock Exchange, ticker HCP. In this video today, I'm gonna break down the company as efficiently as I possibly can, give you high-level bullets about what the company is, who their competition are, what their products are, the valuation, and what I think my opinion is on the stock, if I'm gonna buy it or not, because that's what you care about. Is the stock a buy? I'm gonna break it down for you. You're gonna wanna see this one, so stay tuned. The company was founded in 2013. It's really about collaboration and automation for IT organizations. In a nutshell, what it really does is makes the simplification of infrastructure for businesses, especially if they're going to the cloud on that journey. There's 9 different tools. We're gonna focus really on 4, but I'm gonna show all 9 to you that do different things for different needs across different organizations. But this is really about cloud adoption. You think of infrastructure as a service. So you've heard of software as a service, SaaS. You've heard of maybe platform as a service, PaaS. This is the IaaS, infrastructure as a service. So when you think about a business trying to make an application come to life for customers to use it, there's a lot of things that goes on behind the scenes that you don't think about as a user of applications. Now, if you're a software developer, an IT person, you know all the different stuff that goes in that casserole. And I used to sell software as a service, and I also sold infrastructure as a service and platforms. So this hits home really well, and I understand this business very well, but there's a lot of complexities behind the scene, and these guys do a lot of different things. But when you think about that whole life cycle, from creating a product, from testing it, development, production, you think of all the way to deployment and operations and maintenance. HashiCorp helps that entire lifecycle process, especially if you're taking an application, say, from on-prem to the cloud. Now, HashiCorp is open source, and I'll get to more later how they actually make money. But it's important to understand that HashiCorp supports cloud, private, as well as hybrid environments. So really all 3. HashiCorp is a firm believer that infrastructure enables innovation, and they offer that suite of solutions to help companies assist them with cloud adoption. And they do this by really simplifying the infrastructure challenges that businesses face, from provisioning, security, networking, and the actual deployment of the applications. We'll talk more about the products that fit each of those buckets later. Now, when you think about cloud adoption, and you know this channel covers SaaS, software as a service, and really that whole cloud adoption piece, but that's a huge secular tailwind, and it's in the early innings, and companies are still trying to go through that transition from on-prem legacy type systems to cloud. So there's a lot of momentum behind this, and HashiCorp really is a leader in the space, assisting customers through that journey, through that transition. So I've compiled stats from the S1, from different articles, everywhere I could possibly find information, including their website, their roadshow, and I'm gonna share some of these notes with you. So in fiscal year 2021, HashiCorp's open source solutions were downloaded 100 million times. And you ask, Eric, if it's open source, how do they make any money? I got the answer for you right here. So in 2016, they started selling bolt-on software, mostly focused towards large businesses. So HashiCorp sells features such as collaboration modules, enterprise use cases, governance and policy modules, and premium support and services on top of those open source solutions. So you're seeing that model more and more. A prime example that we recently covered is Confluent. Now, historically, you look at open source and say, well, they can't make any money. Now, Confluent is an exception, and if there were one company I would compare it to, they're very different, but when you think of the synergies being open source, a really good example is actually Confluent. So HashiCorp does not report ARR. And I'll get more about the numbers and the prices and valuations and all that stuff later in the video, so hold on. But it's growing right now, the ARR, about 50% year over year, with 124% annual net dollar retention rate, which is pretty good. HashiCorp has 2,101 customers. Now, 558 of those customers are over $100,000 in annual, and 58 customers are over $1 million. Now, before I go on, if you have not subscribed, please do that now. Hit the subscribe button, click the little bell to get notifications. This channel, guys, is really a lifestyle, and my goal is to help you be a better investor. So I'm trying to provide you with the ammunition, the tools to be successful, give you stock ideas. If you want to take your game to the next level, we've got the Patreon and Discord, and you can check out Patreon Fired Up Wealth. So let's get going on the rest of HashiCorp. Some quick stats for you. So over 36,000 user group members in over 50 countries. So very strong support all over the world. Direct sales group for large accounts. So they have a direct sales team, which is good. There are some businesses we covered on the channel that rely heavily on partners. From a guy that used to sell SaaS software, I cannot tell you how important it is to have that sales team under your own umbrella that lives, breathes, eats, and sleeps your products, okay? They're gonna know it better than a partner is gonna know it in most cases. So they have a direct sales group that's focused really on the larger type customers. And then the mid-size and the smaller business, the SMB market, is handled by a self-service offering. Also, they do have an ecosystem of partners, about 700, and this includes all of the major cloud service providers. They have 4 US patents with 19 patents pending. Now, there's gonna be 2 types of shares. There's gonna be Class A shares and Class B shares, and the B shares are gonna allow 10 votes per share. The Class A shares are what the IPO shares are, and that's 1 vote per share. The reason I bring it up, you might be investing in some of these as kind of the next, 10 bagger type stock for your portfolio when you think very long term. But here's something to keep in mind. The S&P 500 no longer allows companies with multiple classes of stock in its index. It doesn't mean necessarily the stock's not a buy or anything like that, but it could be a complication down the road. It's just something to be aware of as a potential investor. Some quick facts here just to give you an idea of the TAM. So the global public cloud services market, it's expected by 2024 to be about $676 billion. HashiCorp is disrupting across really 4 key areas, which we're going to talk about here in a second: infrastructure, security, networking, and applications. These 4 markets are estimated to be $41.7 billion by the end of this year and $72.5 billion by 2026. And this is according to the 650 group. The cloud compound annual growth rate is estimated to be around 15% between 2021 and 2026. So pretty solid growth. Now, I don't want to spend a lot of time in this because I know for some of you that your eyes just kind of gloss over, but these are the primary products. There's going to be 9 open source tools. We're going to talk about the primary ones, but just remember infrastructure, networking, security, and applications. And it kind of explains what each of these does. So you can pause your screen and read it if you like. I'm going to move on. So the first one we're going to talk about is Terraform. That assists with the cloud infrastructure. You could literally do a 4-hour video just on each one of these pillars. I'm not going to do that today, but this is estimated to be over $2 billion by the end of this year and $12 billion by 2026. So you can see there's a nice run rate there. So next you have the security component. That's going to be Vault, and that's estimated to be over $16 billion by the end of this year. And that's going to grow to $21 billion by the end of 2026. I see that number being even higher, but that's the data I've got. Console, which is going to be networking. That's going to be estimated about $22.5 billion at the end of this year and $40 billion by 2026. So a lot of growth on the networking side. Nomad, applications and workloads, okay? Estimated to be less than $1 billion, $0.7 billion by the end of this year, but nearly $9 billion by the end of 2026. So you can see some of the enormous run rates in front of these type products and these pillars that HashiCorp deals with. Okay, so let's talk more about competition. Honestly, guys, there's a ton of competition. When you think of the big cloud providers, you think of even some of the legacy names. There is a ton of competition across different segments. The thing is HashiCorp covers so many different segments. But here's the thing, and it's very similar to a lot of the best of breed type SaaS names that we like to invest in Fired Up Wealth. They offer one suite that really can address a bunch of different needs that would require several vendors if you did it separately. And so they do have some competitive advantages. They do have some differentiation when you think of their different services, and really just that one throat to choke, so to speak, where they can do a lot of really good stuff for these businesses and make it very simple so they have one point of contact. So I do think that there is risk there with competition, but I do think that HashiCorp, if you listen to some of their presentations with their leadership, I mean, these guys are crazy smart, like super power nerds. I mean, some of the whiteboarding stuff that I watched with like their CTO and some of their founders, these guys are really smart. They understand this stuff. And I do see good things for the company. The only thing I see a problem with maybe is the valuation, which we'll get to in a second. So please do stay tuned. Before we talk valuation, I just want to show you the numbers so you have it. I don't want to read all this. When you look at the revenue, it has grown. for the 2019 fiscal year, you can see some of the numbers. Now, the thing I want you to focus on is net income loss. They've reported consistent losses. And as we know of this recent gyrations of the market's probably not going to like companies that bleed money, that have consistent losses. And you want to at least show improvement towards profitability. Some of these companies with these big losses and high valuations might not be in that Wall Street fashion show in 2022. So I think you have to be very careful. And if you look at the very bottom, guys, you can also see that cash flows have recently dropped. And there are a couple other things that I want to address here. So growth, there's actually been a deceleration. So the growth is still really good. But here's the thing. The year-over-year revenue growth, it slowed from 91% year-over-year, which is very solid growth, to 49% year-over-year in 4 quarters. Now, this company was built really to be a remote work type company first, okay? So 10% of their workforce works in San Francisco. The rest are scattered throughout the globe, and they work from home. And they've been that way really since their inception. And the reason I bring it up is I do think it gave them an advantage when the pandemic hit because they were ready for it. They already worked remotely and things like that. Now, a lot of the tech type companies were already built that way. But I think it is important to note that these guys are much more home-based oriented than a lot of other businesses. And I just have to look at this and wonder if that revenue's, slowing growth is a concern or if it's something where it'll accelerate again. You look at some of these, like work from home type names, they had these huge numbers during the pandemic and the comps are just really, really hard. So is it a situation like that or are we seeing an actual deceleration in growth? And we won't really know until we see a couple of earnings reports after they go public. And that's why sometimes you have to pump the brakes on these and just wait and get more information because we don't have a lot of information on a new IPO other than the S1 and just some general information they share with us. So valuation. So revenue from HCP. Now that's the ticker that they're going to trade with. It's also their cloud managed self-service offering. They call it HCP. It's their fastest growing business segment. And it's about $15 million in applied ARR. But here's the thing. Gross margins on this segment, their fastest growing segment, is currently only 30%. Now, we've seen some companies we've talked about where they don't have huge gross margins. When you have these hyper growth type stocks that have really high valuations, you want to see those gross margins be 80% and above. And so when you look at the overall margins, it's not bad for HashiCorp, but you got to remember they do a combination of cloud, on-prem, and hybrid. And their fastest growing segment is only about a 30% margin. So something to keep in mind. Now, one explanation for that is that HashiCorp has been investing in headcount, trying to ramp up because they see significant growth in the future. So it could be a short-term type of an impact. So some quick stats on this, guys. You can see the market cap at IPO. It's going to be pretty expensive. I'll talk more about the valuation here in a second in terms of the market cap. Price to sales estimated about 43.78 here. EV to revenue 39. This is very expensive. The EV to EBITDA, this is a negative 164. Now that's really not very good in the environment of 2022. Operating margin negative 24%. Net margin negative 24%. The float to outstanding shares ratio, I'll get to that in a second, 8.55%. Proposed IPO midpoint share price is about $70. So this is a stat that's going to be important in the 2022 environment. Negative $61.6 million net free cash flow. Now, a lot of these SaaS companies are that way, which is why the valuations have been getting hit and the stocks have been selling off in recent days and weeks. But it's definitely something to make sure it's on your radar. Free cash flow yield per share is negative 0.49%, and the revenue growth rate is sitting around 50% right now. So valuation, what's this thing worth? What should you pay for it on the IPO if you want to buy it? Now, I'll get to if I'm going to buy it or not here later. But before we do that, they want to raise about $1.1 billion, a little under that, 15.3 million shares. This is going to be A shares, common stock priced at 68 to 72. So that midpoint is $70 a share. Underwriters are able to purchase an additional 2.3 million shares. At the midpoint, HashiCorp would command a fully diluted market value of $14.2 billion, which is a pretty big number for the revenue they're bringing in right now. Now, I've seen this quote a couple different times, but HashiCorp's IPO pricing could give it one of the richest valuations of any technology company. I think it's a little bit of a stretch. There's several names that are going to be more expensive. In fact, the stock we already mentioned earlier, Confluent, is going to trade at a higher valuation than HashiCorp, even at this price range, because Confluent is growing at a little bit higher clip. And I think it does have some additional tailwinds and maybe a little bit more of a moat than HashiCorp. But I do like both of these businesses. Confluent's one that I do own. I do own shares. In fact, I just bought some on the recent dip a few days ago. And I do like that stock. It's very, very expensive. expensive. It's also an open source type platform, but just keep in mind that this is going to be priced very expensively and it could have volatility for a few other reasons. So rule of 40 is a 22. That's no bueno. It's got good growth, but it's the net profit margin is so low in the EBITDA that your rule of 40 is actually at 22, and that you want that over 40%. Now, we mentioned this earlier, but the dollar-based net retention rate is 127%. That's trailing 12 months. That is a good number. And that essentially means that once they get into a customer, they're growing, they're selling more services. I actually would expect that number, even though it's a good number, I would expect it to be a little bit higher just because they have so many different products. There's really those 9 different products that they have. Now, the HCP stock, the float to outstanding shares ratio without the underwriter options, it's going to be about 8.6%. Now, anything under 10% we consider low float. And that means if it has low float, that we could actually see more volatility. So that price might just be a roller coaster and go up and down. That might give you a hint of what I'm going to say later when it comes to if I'm going to buy the stock or not. So hold on. So am I buying the stock? The answer, well, I actually can't buy the stock when I do a video like this, The Motley Fool, for at least a couple days after it's published. So it'd be next week. Now, with that said, I think that this stock it's priced pretty expensively. It might not be insane. If you look at some of the other stocks that are similar to it, it's kind of in between. It's not quite as high as Confluent, and it's a little bit more than some of the others. The thing that concerns me is that decelerating growth rate, the market environment for 2022, where they want to see path to profitability. This is really early stages for this type of company. And I think for me personally, I probably can wait and maybe buy in a dip later. Maybe I have to pay up 10 or 20% more down the road a year or something. And maybe it runs and I miss it. But I think it's prudent with the market conditions on this one just to kind of sit in the sidelines. I'm going to be holding off on this one. I do like the stock. The problem is if the midpoint 70, it might open up at 80 and run to 100. Honestly, I think this thing is already over expensive, too expensive before it even goes public. And it's going to be higher when it opens to retail, when we start buying it as retail investors. So I like the company a lot. I hope this brings some information about what it's all about. I'm putting it on my watch list. It's going to be very high on my watch list. I do see good things for this company longer term. I think the valuation is just a little bit steep right now for that growth. But with that said, I do see a possibility of that growth recelerating, and the stock could take off from then. So you're going to have to watch earnings and be careful. It's going to be one of those risk reward, high flyer type names, probably kind of speculative at these prices. Do your own homework, make your own decisions. If this is helpful, guys, subscribe to the channel, drop me a like, drop me a comment, check out some playlists, some other videos. Have a great rest of your day. Take care.